13th of July 2022. This isn't financial advice. My voice is a bit croaky. I've been a little bit sick. So I'm going to do a general market review. I haven't been as diligent as what I should have been over the last few months, but because the markets have clearly been in a downtrend. But before I jump into that, I'm going to, the one and only trade I've done of late is CLR. I actually closed that at a tiny loss. I'm actually, bizarrely enough, sort of happy with this trade. So I bought it, I think it was this day here, sort of retracement to the 50-day moving average, a bit of an upside reversal does either that day or that day. And then especially as I was completing my FY22 review, I realized it was probably a mistake. So by that I mean this pullback here in itself, it looks fine, but I didn't take into account the big picture, and that's one of the things I identified is on my review. I've just got to sort of stand back and also look at the big picture rather than just the minutiae of the individual trade. So you can see here this sector has been very strong. This stock's already tagged the 50-day a number of times. It's already had a big run. If we go to the weekly, you can see that. So since the pandemic, it's gone up from about $8 here to now 62. So that's a huge move. Of course, it's not to say it won't keep going, but it's potentially sort of getting towards the end of its run here. Coupled that with I'm looking at the weekly here, huge sort of distribution there. So that's sort of showing you that it's just things are looking a little bit toppy. It doesn't sort of show. It's sort of fairly nice and trending here, but yeah, stand back, look at the bigger picture. Probably a little bit concerning. Combine that with the overall sector. Now, this oil and gas exploration is only one of the oil and gas sort of sectors and one of the energy sectors, and they're pretty much all look sort of being very toppy recently. So big sort of moving along really nicely, and look like a sort of volume blow off type sort of final move here. So this sector, along with other similarly related sectors, all looking sort of very toppy here. Sort of rolled over, failed the 200, can't get above there, and I'm sort of just mucking around with the one stock that hasn't gone down. So this is, I think it was in the last video, I was sort of talking about the stocks in an amber phase. It's sort of doing okay, but then you can get your head cut off really quickly because the rest of the market, the rest of the sector is sort of really starting to fall away. So what I did with this one, I just sold it very tiny loss. So I'm happy with that, because not happy with the entry. If I should have sat back and sort of thought about that more, but realized it was a mistake, took into account what I've learned in my review. I said, hang on, I've made a mistake here. Let's just jump out now before the stop losses even hit. So saying all that, I might just turn around and rip away. Let's move on to the market review. I spent quite a bit of time today going over all of my indicators, pointers. So let's start with the NASDAQ. So, okay, let's just go through a few things. So, firstly, we had some signals that would normally indicate to start getting back in. The first was a follow-through day on this day here. Also, the number of stocks trading above the 200-day moving average really got down to extremely low levels, and then finally managed to push back about 15%, which is normally a sort of very generational sort of opportunity for me. Also, similar sort of signal with the number of stocks trading above the 50-day moving average. But saying all that, I think this is a suspect move, this little rally here. So I'm going to go through a few reasons why. The first thing is, if I look at the FANG stocks, and by FANG I also include Nvidia and Tesla. And also it should be, I guess, not Facebook anymore, Meta, but anyway, let's just call it FANG. I look at those, and some of the charts like Apple aren't too bad, but then Amazon, Netflix, Meta just look awful. So the big boys in this index just don't look good to me at all. You know, either just stage 4 or maybe sort of stage 1. You can try and argue that some of these stocks are in. So okay, that's the first thing. Now look at this. The moving averages, are they acting as support or resistance? So clearly resistance here. Sort of try to get above here, but the 200-day sort of turned around and acted as resistance. So we're just seeing resistance all the way through here. So we had another point is we had distribution on these days here after the follow through day, which is actually pretty close to the follow through day itself, indicating there's a high likelihood this rally attempt is going to fail. The other thing is there's just not much leadership in there. So Tesla looks increasingly sort of overall toppy after it did a 10-bagger since 2020. I can't see new leadership coming through, or very minimal amounts anyway. Breakouts aren't working. The PE, price to earnings ratio, is the forward PE is 20. Now that was, I can't believe this, it's actually got up to about a PE of 38. So even though it's come down a lot, the PE is still not particularly cheap. Now one thing in a bear market, bull markets tend to overshoot, valuations get too high, and the opposite happens with bear markets, that valuations get too cheap. Now I look at the overall valuations of individual stocks, and I'm not seeing like bargains, like screaming bargains in there. So so if we add all of that up, including the macro backdrop, which we'll get to in terms of interest rates and inflation, also there's no Fed put activated, at least yet. I add all of those ingredients up, and so yes, a few signals have been going off, but I'm not seeing really much of a trade there. I'm certainly not seeing the individual stocks to move through. So I'm still going to call this a red traffic light for me, which is either try and be short or just stay out. Now I've really just ended up being just staying out of this market. Obviously that can change quickly, but that's my view at the moment. So also telling me just to be really suspect of rallies in this rally. So we've seen this here, like tried to rally, but again there was no leadership here. What do you do? Similar thing here. So yes, it might rally, and you could have these sort of face-ripping rallies in a bad bear market, but I'm going to be trying to be very cautious of that. I'm not sure whether I'll even trade those or not, but all of the reasons above, I'm just very cautious of this. Let's move to the S&P 500. Sort of overall similar similar feeling, perhaps not as extreme as the NASDAQ. We had a follow-through day on the 24th of June, which is that day here. Again, distribution not long after. There was only one day, admittedly, but we have had distribution. So again, indicating that this rally is a little bit just to be treated with suspicion. There was leadership in here, so oil, gas, energy. That was sort of the big ones there, but they've all rolled over and looking increasingly like they're done, or at least they're done for the time being. There are other little bits of leadership, so Chinese stocks, insurance, and biotech. Now, I just don't know about biotech. I'm not sure whether you could even include Chinese stocks in here because, well, that's really a whole different market altogether. A lot of the Chinese stocks have been basing for a lot longer. They actually look much better than me, but like I say, can I take that as a good leadership group in the S&P 500? I'm a little bit suspect. Similar valuation. No, sorry, this one's a bit cheaper. The forward PE is 17. Again, that was also down from a PE 38, which is mind-boggling. Bear markets don't tend to end on an average valuation. They'll tend to overshoot on the downside. So could we see lower valuations? Yeah, absolutely. We're also going into earnings, and if we start to see, which is what Michael Burry sort of thinking is going to happen, an erosion in earnings per share, we could also see further compression further drops in the stocks. So similar, pretty much the same conclusion in the NASDAQ. Not much leadership. moving averages being treated as resistance. Yes, we're in oversold conditions, so you're getting like some of these triggers going off, but yeah, be just very suspect. Be very suspect or everything. Excuse me. Okay, so again, I'm just going to call the S&P 500 a red traffic light. So I'm not sure if I've got this order right, but the next thing I've got is general points to sort of take into account. So let's move on to that. This is the 10-year note. Big move. This is sort of starting to look like a bit of a last gasp sort of move to me, like a blow off top. So failed the 50. I thought actually I might just keep going from there, but it sort of had a few big days and now sort of just being sold off again. So yeah, my suspicion is this is pretty done. So which is showing that interest rates might have actually peaked. Now let's just go through some general things. Margin debt, is that coming down? Well, yes, it is. Crypto, yeah, all those cryptos look stage 4 to me. Plus we're getting other things like Luna, that 3 arrows blowing up. So we're getting sort of a meltdown in that area. Another thing I've started just tracking is who's Google searching for what. So just to see what sort of people on average are looking at. So people will say Googling options trading. That really spiked last year, but that's sort of slowly but surely fizzling, which is actually quite good. Housing crash and recession have been huge spikes in search terms. So people obviously getting a lot more scared. General euphoria is does appear to be actually really quite negative. In general, are breakouts working? No, they're not. A lot of traders were in this end phase thing, and I talked about. I just couldn't see it with the solar. Anyway, look, it's just in a base. So that's nothing wrong with that. Anyway, got creamed last night. Okay, touched on this before. Overall, the Fed is in a tightening phase. There is no Fed put at the moment. VIX is 27, which actually is sort of fairly high and been coming down. And seasonality is actually in the US summer now, so typically you see things just wallow around. So, inflation, of course. That also appears to be peaking as well. If you look at commodities, hard commodities, soft commodities, across the board, a lot of these things are coming down and coming down pretty hard. Oil looks like it's pretty done to me. That's going to stage 4. Copper's already there. Sugar, corn, nickel, you name it. Wheat. It's all sort of looking very peaky or past peak to me. So used car prices are coming down. Used car search terms are coming down. So there's a lot of things I believe. A lot more listings for housing around the world is sort of going up. So I think there's a lot of indications that inflation has peaked, if it hasn't peaked already. We're seeing that sort of being reflected in interest rates. That's coming down. So I think the big picture here is bit by bit the ingredients are for inflation to be getting sort of knocked on the head. The bull market sort of a bubble has been pricked. So saying that, if you combine that with what I was just saying about the stock market indices, is that they don't look like they've finished going down to me. So I think we're seeing the general ingredients starting to come together. So we might see lower valuations coming in the market, and that's because we might not have seen like the last of the fear and selling in the market. Although we can see the ingredients starting to come together for the other indicators I just went through. So yeah, do we see sort of more interest rate rises and the Fed going too aggressive in the negative sense? Too aggressive, obviously, in the positive sense by printing money coming out of the pandemic. So do we see this squeeze continue? Although we can see the ingredients are starting to come together for at some point the Fed's going to have to reverse course, put the put in. Hopefully that's when stock prices are super cheap, and then that's when we start to, we get the follow through day, we get the indicators popping off, and then that's when we start going hard. So my indicators are saying that we just aren't there yet. Now let's just see how good a call this turns out to be. That is all I'm going to cover for today.